Hello traders, welcome back to ChrisFX. Today I'm coming back to you with a perfect new 1 minute scalping strategy. This strategy is very easy to use, but first of all we have to go through certain points that I have written down over here. Let's make those letters a little bit more visible. The most important thing that you have to understand, because you might question why is Chris showing us a strategy using 3 EMAs, which stands for 3 exponential moving averages. What you need to understand about trading is that there is no optimal strategy out there. It took me a while to understand as well, but what we need to do and what those indicators will help us with, there's nothing magic about what I'm gonna show you, and there's no particular reason either why the market should move a certain way when, for example, the exponential moving averages cross over or when any other indicator does something. But here we go to my first point, as you can see right here, that these strategies that I'm showing, especially those using indicators, even the other ones that have a systematic approach, they offer a systematic approach to trading. There is no particular reason, you have to remember that, as to why the market should or should not move a certain way. So, let me explain what I mean by that. This strategy is very simple and will be using the 50 exponential moving average. It's very simple. You go to your indicators. Let's go to the indicators. You type down EMA and you will go to moving average exponential. Once you click on that, of course you have to add 3 of those. Once you click on that, then you go and double click, for example, in one of those. You will put length 50 and then to style you make it whatever color you want. Then you will fix the next one, which for example in this occasion is the 20 EMA. And then the third one you will go and place a length of 9 and the style whatever color you want. So this strategy will use the 50, the 20 and the 9 exponential moving averages. There is nothing in particular to those moving averages or to any other moving average or any other indicator which predicts future price movement. The only thing that using those indicators can achieve is a very systematic approach. So what they do, they remove all subjectivity from our trading. If you learn, for example, this strategy the way I'm going to teach it, which has nothing better to offer compared to probably some other strategies, what it has to offer though, and every single strategy using indicators, is a systematic approach. So if I get 2,000 people and they trade this way, they will all place the trade at the same exact spot and they will all place the stop loss at the same exact spot. It does not leave any room for subjectivity. That's the important thing. So you keep following what, for example, this algorithm is telling you, the algorithm of the exponential moving averages. It's telling you nothing, but it's a systematic approach. You are just placing trades only when a certain pattern happens. And now that we have cleared that out, that this means nothing actually when the crossover happens, this is just a systematic approach, the strategy is very simple. As you see, in dark color I have the 50 EMA. In this blue color I have the 20 and in this color I have the 9 EMA. When both of these indicators, the 9 and the 20, cross over with the 50, it doesn't matter if the crossover between them, the 9 and the 20, only when they both cross the 50. Okay, so for example, if we go here in the past, let's start from here, for example. Let's see what we see over here. Okay, the 9 EMA, as you can see it, has already crossed with this EMA, with the 50 EMA. We are waiting for the other EMA to cross as well, for the 20 EMA to cross the 50. When this happens, in this instance, the price has left a lot, so it's up to you if you would place a trade in this occasion. Immediately when it happens, you place a sell trade here and you have a stop loss until here. You will go to 5 to 1 in each trade. Okay, in this occasion, let me move this a little bit so we can see. In this occasion, I wouldn't take this trade because it's 5 pips, and in order to get a 5-1, according to my strategy, you have to go here. I wouldn't take this trade, but you can take it. Okay, anyways, let's follow some examples and see what statistics we're gonna get, the statistics that we're gonna get with this systematic approach. Okay, let's wait for another crossover of all of these EMAs, let's say. Okay, we move forward, waiting for the first crossover to happen. I will be a little bit quicker here. Okay, we don't have any crossovers. Here the 9 has crossed above the 50. If the 20 also crosses, then we will place the trade. Okay. This again is something I wouldn't take. This is where the discretion can get in. If the movement would be like here or something, it's very easy because you have a 3 pip stop loss. Here you should be entering over here with a 7.9 pip stop loss. So anything above 4 pips I wouldn't take. We can put that as a rule as well. Okay, so let's move forward and see what happens. Okay, 9 crossed. Okay, let's see. Let's maximize it a bit. 9 crossed here, but crossed back in. We have nothing over here, nothing going on. Now the 9 crossed again. We're waiting for the 20 to cross the 50. Let's see if this happens. It doesn't happen. Okay, so we keep moving forward. Here we almost see all the EMAs crossing. Let's see, here it would be a potential trade if it is 4 pips and below. Okay, we're gonna check it out right now. It's 2.9 pips. I will place that right here. So let's do it 3 pips right here. I would be taking this trade. Okay, and before you make any conclusions as to probably this is garbage or whatever, let's wait and see how this would be working. This is a very systematic approach. Okay, we see we have until 4 pips I would take the trade, until 4 pips stop loss I mean. The 9 EMA crossed on the downside, crossed the 50, and now we have a crossover immediately of the 20 EMA crossing the 50. We take a market execution, we sell over here with a stop loss as we can see it, and we lose this trade. Okay, let's keep it absolutely realistic right here. -1%. Let's put percent. Supposedly we're risking 1%, which is a lot. I would go for 0.2%, 0.3%. In this occasion, what do we see again? In this occasion, while this happened, we also saw those EMAs crossing from the other side. So realistically, when I would lose this trade, I would be taking the trade right here, let's say. You can also take the trade right here when this candlestick closes. I think realistically, I would take it right here. And I have a 2.7 pip stop loss because this is the previous area. Okay, we wouldn't go for this area that much. It's a 5 pip stop loss here. So I would go to 2.6, let's say, pips. And I would target a 5-to-1 risk to reward. So I would go for this 5-to-1 risk to reward. Let's see what this has to offer. Okay, we're still good here, and we have another loss. Systematically, we keep doing the same thing again and again. So another -1%. Here, as you can see, only the 9 EMA has crossed. We don't have a cross of the other EMA, of the 20 crossing the 50, but let's see what happens. Here we have a crossover. And here I probably would be taking the trade. Let's see the pips. It's an 8 pip stop loss, so I wouldn't be taking this trade right here. But let's see what we have over here. Okay. We crossed above. Here the 9 has crossed above. We're waiting for the 20 to cross above the 50 as well. Here it has happened. So here we are taking another trade. Remember, with this strategy, this is a large stop loss, but this is where discretion gets in. This is something that I would like to take, to be honest. Okay, this is a trade that I would be willing to take, I think, right here. It is up to your rules, of course. If you have clear rules, as to what stop loss you're gonna follow, then do not take this trade. And let's see if this would have played out. Okay. We keep going and going. Okay, let's see. Yeah, this has played out very nicely. Yeah, so you can place your own rules. In this occasion, it seemed to me like a very nice trade. Of course, as you can see, I'm doing random. I'm following random price action. I went somewhere in the past and I'm doing random trades. I'm taking random trades, as you can see. So it depends on you. According to my experience, I would be taking this trade. I liked it a lot, even though it's 5.7 pip stop loss. If you have very clear-cut rules, as for example, I'm not taking anything above 5 pips, then don't do it. By all means, I would be taking this trade over here. So plus a 5%. And let's see if we have a crossover to the other side now. So if we can take another trade. And let's see also how fast this whole thing happened in 2 hours and 23 minutes, which is not a lot at all. So it looks a lot, but it's not. It's the 1 minute time frame. Let's see if we have a crossover from the downside right now. Okay, again, this is a systematic approach. This has nothing to do. These EMAs do not predict the price in any way. Okay, we are just taking those trades when this pattern happens, and we are taking for a certain risk to reward. Remember that. Let's see if we have another crossover. What was that? Nothing. Okay, for example, you can see from this trade, you could have gone even to a 20 to 1 over here. So remember that you can modify this strategy however it suits you best. Okay, let's move a bit forward, waiting for a crossover of the 9 with the 50 and then the 20 with the 50 to take the opposite trade now. We went for a beautiful 5 to 1. We have a crossover of the 9 and now we're waiting for a crossover with the other EMA and we have it right here. Of course, when you see this, immediately you take the trade. Let's see how much this stop loss would have been. Let me modify that a bit, and this is a 17 pip stop loss. Of course, we wouldn't be taking this trade. So let's move forward. We crossed over from the upside again, so we have one crossover, two crossovers. Here we could be taking this trade. Let's say that we are taking the trade right here. Again, I'm willing to place a 5.8 pip stop loss in this occasion to go for a 5 to 1 risk to reward. Let's see how this plays out. Hopefully. Yeah. And you see that we are winning this trade right here. One more win with this systematic approach, plus 5%. Let's do two more of these trades. Okay, let's take two more of these trades. Again, you see here I took one with 5.8 pip stop loss and here with a 5.7 pip stop loss. They looked like great trades, of course. And let's move forward. If we see a crossover from the downside, so we can sell, a sell example that wins would be very nice as well. And you can see that these trades went way higher than expected. This one would have gone until 27 to 1, but of course we don't know it. The way I have tested it for the moment, I'm going for a 5 to 1. Let's see if we have another crossover. We have a crossover of the 9 with a 50. We're waiting for a crossover with the 20 with a 50, and we will take the trade if the stop loss is normal and not like 17 pips or whatever. Let's see. No, I think this would make it a huge stop loss. Yeah, we are not taking this trade. So we keep going. I want to do two more trades so I can show you. Of course, this could have been a win, but it's too many pips. 10 pips, I would never take it. Yeah, this would have been a win, I think. Here we have, no, we don't have a crossover. We have one here This is very messy price action right here. It's like a consolidation. Usually we want to avoid those consolidating, let's say, places. We don't want to take trades here because you don't see what's happening. One, it's crossing, then back, then again. But if we have a good chance, now the 9 has crossed the 50, as we can see right here. If the 20 also crosses, probably we will take a buy. Let's see if we can take a buy right here. You see, these strategies fail dramatically when we have a consolidating phase. This is the thing that you will have to go through. So with a 5-1, we would be going for something like this. 4 pip stop loss, beautiful. Let's see, almost stopped out and stopped out minus 1% right here. I will take 1 or 2 more trades so we can check it out. Minus 1% right here. Let me minimize it a bit. And if we have another crossover, which we do have, I think, right here, yeah, both of the EMAs have crossed towards the other side, I will take 1 more trade right here. 5.7 pips, and I will be going for a 5-1 risk to reward. Let's see. Still not stopped out, as you can see right here. But probably we will get stopped out. We are gonna see. We are gonna see. We don't know that. It's important that you let it run until the 5-1 to have proper statistics right here. Okay, moving forward and forward. I will go to the 5 minutes to make it a little bit quicker, so I apologize for that. And here we go. We are winning another trade, as I can see. I think that's enough with the examples that we gave right here. We will make a sum of this whole thing. Okay, this goes another 5.7 pips. 5.7 pips this one, and 5.8 pips this one. So you see a pattern over here. Those stop losses that were around 6 pips, let's say, those were the trades that we won. And anything below, it's what we lost, but it doesn't have to do anything with the stop loss. I'm quite sure it has nothing to do with it. It's just a coincidence, probably. Of course, this strategy would need a little bit more testing, but for the very small sample that we have here, we have 1, 2 losses here, and we have a third loss right here. But we also have 3 wins. 3 times 5 does 15. Minus 3 does 12% win. If you also take into account the commissions of the broker, you would have, let's say, a 10% win, to be totally honest, but I will show you how to get money back from the commissions in another video. Tell me if you want me to make this video for you. You can request money back through a special service. Okay, this was the strategy. Again, one more time. These strategies offer a systematic approach to trading. There is no reason as to why the market should or should not move this way. The fact that those moving averages cross each other means nothing, but it offers us a systematic approach. You can couple it with something like stop loss above this crossover needs to happen of the 20 and the 9 crossing the 50. Okay, so when I say wait for 50, 20 and 9 crossover, it means that the 9 has to cross the 50 and then the 20 has to cross the 50. Okay, this is what we want to see. We don't care about those two crossing together. This has nothing to do with those two. This has to cross this, and then this has to cross this again. And then we take the trade. And we can place a rule, stop loss above previous area at least 2 pips, and you can say, and max 7 pips, let's say, according to what I showed you right here, and a take profit of 5-1 risk to reward. So we have a fixed way of placing trades, of placing stop losses, and also of taking profits, a systematic way. So keep an open mind. It doesn't matter if we trade order blocks or if we are trading with indicators. What matters is to have a systematic approach, which in the long term will give us a significant statistical advantage in the market. If you liked this video, go ahead and click the like button. I would really appreciate that, and feel free to share this video with anybody that you think is going to be helped by this video. And furthermore, feel free to comment down in the comment section and ask me anything about the strategies that I show or anything that you want me to show for future videos. This is gonna do it for today. Thank you all for watching. Until next time.